All right, guys. So if you can hear me and you're in here, go ahead and confirm that you can hear me. Hopefully you don't hear the fan too much this time. I tried to get my mic to work, but it didn't work, so I'm using some headphones. Let me know if the voice or the sound is too much or annoying. If it is, then I'll just end the live and do your charts manually. I'm gonna give you guys some more time to hop in. Sorry it was last minute. I realized that I had about 20 charts to make, and I feel like I would rather explain them to you guys over live than by writing. All right, so we got some more people coming in. If anybody else needs me to chart theirs and send it over, I could do that. Harry, you asked me for Harry asked me for Eli, Play, and Saber, so I guess we'll skip those in the live. Sweet. So we got some more people coming in. I'm gonna give you guys some more time. Like I said, sorry it's last minute. Okay, cool. So I'm just gonna go ahead and get started here. So the first chart that we're going to work with is going to be Apple, and these are Julian's charts. So I'm going to do them in the order that you guys asked me for them. So I'm going to start with Julian. Julian, you asked me for Apple and Amazon. Hopefully you made it. If not, then I'll go ahead and let you know. So we're going to start with Apple here, which I'm sure a lot of you are kind of curious about considering it's nearing its all-time high, but it didn't quite make it there. So let's see what Apple did on the 1 day charts today. So we saw Apple. So yesterday we talked about Apple and we spoke about this candle possibly being a reversal candle. We specifically said that this is not a good sign for the future of the stock because it typically means that there is a reversal coming. With that being said, Apple did indeed make a really strong downward move today, as we saw, and it closed all the way down at 322.32, still away from its all-time high. So where do we go from here? Not to freak out, Apple didn't go below any significant supports. It didn't make any lower lows. As you can see, the stock is still making that smooth higher high, but it did need that pullback today. So that way it can cool off a little bit. So from now, for the future of this stock, what I'm expecting the stock to move sideways and kind of consolidate before making that gap up. And I'm assuming that for that gap up, what we'll have to wait to see first is some kind of good news coming out of the White House, because with stocks like this, large cap stocks, usually when they pull back is just because there's not enough good news flowing into the market. There's not a lot of excitement about the market, so it's going to be tough for these stocks to make that massive breakout. But that's just the 1 day candles. Let's just go ahead and see how it played out on the shorter term or on the macro levels. As you can see, the stock is still very much within trading range. Its support is still at 320, and then its resistance is at 328. Excuse me, guys. I'm gonna kick my cat out because he's being real loud. 1 sec. Yeah, like back to it. So the support is still at 320 and the resistance is still at 328. So everything is still in motion. There's not really a need to freak out. Some of you may freak out on these moves because you've traded options, but it does come with the risk of trading options. Typically a $2, $3 move on a stock, if you're not losing that much, but when you have options that are expiring in 2 weeks, of course you'd start to sweat it a little bit. but you gotta kind of gauge the market, and you gotta gauge yourself and your own risk tolerance when you're playing options. You have to kind of foresee days like this, and you have to ask yourself if you're strong-willed enough for you to not sell, if you believe that the pattern is really going to break out. Don't bother to buy options if you are going to freak out over a small red drop every time, because you're just going to end up losing every single time. So when you're playing options, it's really important that you gauge the market, and you have to gauge your own risk tolerance. So Apple still looks good. We're still over our 320 support. We actually closed at 322 today, so it may come down further tomorrow and bounce back up. Unless it drops below 320, then we're kind of in trouble, because that means the stock broke below that support, meaning that a possible reversal is coming depending on the overall market health. Now let's go ahead and go to Amazon, which is also a chart request by Julian. So Amazon, I'm kind of seeing a double top somewhat at the top right over here. This is the first top and this is the second top, but it's not really significant. So I would say that Amazon is still in safe territory, just like Apple, because it's still maintaining that support of $2,440. So we can draw a support line right under here for Amazon, because this is in its initial breakout point. So with that being said, the stock could technically fall all the way down and bounce back up. There was a hammer candle on the 1 hour candles on the last hour of the day, which could be a good sign that the stock will actually push back up tomorrow. Now, one bad sign that we're looking at the 1 hour candles with here is the fact that it dropped below the 10 and the 20-day moving averages on the 1 hour candles, which is not really something that you want to see if you're in a stock, because those moving averages will act as resistance and support lines. In this case, they were acting as support all the way until the stock took this bearish engulfing, and then it fell below, and then you could see that the stock had trouble breaking above the 10 and the 20-day moving average right after it dropped. But so far, it looks like the Amazon is not in trouble, so it looks like it could very much push back up. But you got to remember, they are trying to make an all-time high. So it's really not going to be an easy push. There's going to be a lot of agreement between the bulls and the bears before they're able to agree that, hey, Amazon is actually worth more than $2,500 all of a sudden. Before so when you think about it psychologically, when Amazon pushes to this target, all that's happening at the top right over here is a battle between the bulls and the bears. The bulls are paying the max amount of price, and then the bears are selling it at a specific price, because they're just not willing to take the stock over this. It's like demand of the market. You would only pay so much for a sweater before you say, you know what, this is somebody adds more value to it. Next thing you know, you are willing to pay the extra $10 or the $20 or the $30, whatever it is. Same exact thing with stocks. The more they become demanded, the better offering that they have, then the more people are willing to pay for them. Just kind of how we saw the pressure with Zoom and work. So Zoom has been skyrocketing, and that's because demand has gone up. Therefore, investors and traders are buying it up. That's how all charts will move. People are just willing to pay more for that price. Now let's go ahead and go to Josh's chart request, and that's going to be Nvidia. So Nvidia, same idea. I'm finding a kind of a repeating pattern going with tech from the first three charts that I've done so far. And that's always important for you to realize when you're doing your charting and your analysis is what are the patterns that are happening in the overall markets in the specific sectors. For example, with Nvidia, I'm definitely seeing the same kind of pattern repeating from Amazon and Apple. And when I move on to other tech stocks, we're probably going to be seeing the same patterns repeating over and over again. And that's because sectors just naturally move together. When you look at oil will move up together and down together. When you look at technology, they will move up and down together as well. For the most part, there's always going to be those laggers that are not moving together, and that's usually because of some kind of earnings or some bad news or something that's holding them behind. But Nvidia, same exact idea. They're still holding over our 345 support. When you really think about it, today's drop wasn't that bad. It may have looked bad on the outside, but if you really inspect it, we've been going up for quite a while now. So a drop like this on a random day is just expected at this point, because if we didn't make this drop, then we're just becoming too stretched out, and we are just overdue for a 100-point drop, which is really not that dramatic compared to the 500-point day that we had just the other day. So you kind of have to put that in your realm too when you're studying the market is how bad was that drop, and was it something that I need to kind of take my money from? And in this case, I don't think it was that bad of a drop. Now, tomorrow is going to give us a better insight. Tomorrow is Friday. People want to close their positions before the weekend. So we may see another red day tomorrow, but we kind of have to gauge ourselves and we have to gauge the market to see if it really dropped below any significant supports. So if Nvidia, for example, drops below this support right over here, which is 326, that's when I would say, okay, we might be in trouble. But if Nvidia comes down to 328 and bounce, that we're still in safe territory. It's not going to be that bad because we're still technically making higher highs. So Nvidia, not too bad of a day today. You still have the same trading range, the 345 to the 363. Expect it to fluctuate between those between those 2 points. And then, but if it does drop, then make sure you wait for the bounces before you enter. Now, Raymond, you wanted a chart on Guild and ERI, which ERI is a very popular one. I mean, that one has just been a monster. So with Guild, so we actually created this, I believe, yesterday, if I'm not mistaken. So Guild had a massive run up. Maybe not yesterday. This was part of the chart, maybe. So Guild had a massive run up, and this was on May 29th. So this was on Friday, was on our watch list. So it ran up. I highlighted the fact that the RSI was overbought, and I expected the stock to pull back to the 326, and I'm sorry, to the 76 support before bouncing up. However, the plan doesn't always go accordingly, so you always want to plant your next supports that it could possibly bounce off. And the very next support was actually the $73 price point. Guild pulled back a lot stronger than we expected and pulled and managed to bounce at its very next support of $73, giving us a perfect double bottom. And we can see that the stock had bounced up significantly. I know Rob got on this one. Good job, Rob. And the stock bounced significantly, and it even managed to push right back through 76. So what are we expecting from the stock for now is if we really look at the last 2 hours of the day, these aren't really strong upward momentum candles. These are more of a sign that, hey, we need to slow down a little bit on this buying, and then we need to take the stock back, let it cool down a little bit, and push it back up. So now I believe it's safer to say that the stock may now pull back to just the 76 area and not fall back to the $73 area. But one thing to keep in mind when you're looking at Guild is that the stock is very news driven. So when it comes to anything that has to do with the coronavirus, if they announce any good news, this stock will skyrocket. If they announce bad news, then this stock will likely just drop like like a dead weight. So you have to keep an eye on the news when you're trading this stock. But I do expect a lot from it. The stock will pull back to around 76 likely, unless it gaps up tomorrow. And I'll give you guys the scenario of what happens when it does gap up. But the stock will likely push back down to test 76, giving us a better entry. You can enter the stock at that support, ride it back up, wait for it to break 78, and the next price target is going to be its next resistance of $81. But the stock will likely make a series of highs and lows before hitting that $81 mark. So that's pretty cool. I like what this stock is doing. I'm expecting it to bounce off the 76. But let's say that doesn't happen. Let's say that the stock bounces over that 78 right at open. Let's say it gaps. If it does indeed gap, keep an eye on that RSI, because if the stock gaps in the morning and the RSI is already near the 70-point mark, then we can't expect the stock to keep on going before having to pull back. On that pullback, then the stock will likely bounce off the $78, because if it gaps above this resistance will turn into a support automatically. So the stock will likely pull back and bounce off 78. So the way you play this chart is just really accordingly to where the stock opens up tomorrow. Your best bet is that it opens below 78, pulls back to bounce off the 76 to push back up. So I like what this stock is doing. I'm definitely going to keep an eye on it. So the next stock that we have is going to be ERI. So let's see what ERI had for us. ERI is still being a monster. Look at that. They managed to go to 42.96 today. Let's see what it did on the 1 day candles. So I think we charted this yesterday, and I think we talked about how strong this green candle was, and how it was coming off of a bullish pennant flag in which it broke up. Yeah, I'm definitely sure that we talked about this, and the stock managed to actually open above the $40 um, resistance line. And here's something that's so important. We just talked about this, and we're able to just I'm able to give you a perfect example right in front of me. Um, as you guys can see, the stock had opened up. This is a 1 day candle, so this represents the 1 day move of ERI today. And you could see that the stock gapped up. It opened at the bottom of the body of this candle, not at the bottom of the wick. It opened at 41.42, but the stock had gotten pulled down to retest that support. And once again, this is a good lesson. This is why we put our stop losses below our support lines, slightly below, is because look how far this stock came down, but it managed to bounce back up. And so, like I just told you guys with Guild, if a stock gaps up above the resistance, that resistance becomes the support, and the stock will try to bounce off of it, in which we saw happen perfectly on ERI today. And it managed to close above that resistance, which is still acting as its support. So where does ERI go from here? I'm gonna be frank with you guys. These two candles are very strong. I mean, this is a strong bullish move. This is a strong bullish chart, but personally, if I'm not already in this stock, I would kind of stay away, but I would keep an eagle eye on it, because a stock that has this strong of a move is not moving just based on hype. It has something to offer, and what it's offering right now is the fact that they are such a useful company in a time of investing when stocks are down. A lot of investors are looking at them and they're seeing a bargain, and even the worst investors will pay up when it comes to cheap stock. And so with that being said, I will keep an eye on the stock if I were you, and I would expect it to pull back to around the $32 range before going back in. It will give us an entry and it will push back up. Definitely keeping an eye on ERI here. So what's next? Let's see. Harry, I'm going to send you your charts. Mutaz, or Martaz, let's see, workhorse. All right, so workhorse. Very good lessons to be taught from this is the moment the stock had this bullish candle that had it close above the 10 and the 20-day moving average, the moment that it had that that candle, it followed up with another green candle, pushed it above the 20-day moving average. That triggered everybody's scanner. So you got to remember, when you're scanning for stocks and other traders are scanning for stocks, they when they move up above that 20-day moving average, their scanners automatically give them a notification that, hey, this stock has now crossed over that 20-day moving average on the 1 day candles. You should probably take a look at it. This is why I often alert you guys at random times about penny stocks, and that's because it pops up on my scanners and I look at it, and if the chart setup makes sense and the volume is there, then we go ahead and create a setup on it. Now the setup doesn't always work, obviously, but when it does, you guys can see what happens with stocks like VISL that had a massive run up today. So you gotta, like I said, this is why volume starts to flow into things all at once. As stocks start to pop up on traders scanners out there, they start buying in. So the stock popped up on traders scanners, more buying in happened today, and the stock managed to gain more and more green volume as these days went on. So what do we expect the stock to do from here? Well, the RSI is not yet overbought, so that's good news. So we want to take a look at the macro levels. What is this stock doing on the macro levels? You could see on the macro levels that the RSI is definitely overbought. So I'm looking at 1 hour candles here, and I could see that the stock has a resistance at $3.40. So the stock is resisting at $3.40. So we should expect the stock to struggle to get over this point. So now where do we put our support? Our support is going to be the stock's previous resistance, which was this point right over here. And I say that that was this point because when I look back, this was the most significant point that the stock struggled to get over. But when it got over it, it got pushed back at 340, making that its resistance, and then it came back down, struggled to break under $3, which makes it a support. But as it broke under it, now that point became a resistance. And you could see even right here, as the stock tried to push over this point, you can see that it got rejected, pushed back down, and pushed back up. So now what I'm expecting from this stock is a little bit of consolidation between the $3 and the 340 mark. I would like the stock to move sideways for quite a while before I go into it, just because I wanted to build up that pressure. I wanted to build up that volume before it really takes off. And the next price target after 340 is going to be $3.80, which is right around its next resistance. However, If the stock drops below $3, you really need it to bounce at 260, because if it doesn't bounce at 260, now the stock may make lower lows and switch directions into a bearish direction. So I like what this stock's doing. I see a big movement coming from it, but we need to let it cool off just for a little bit before going in. Alrighty, so that was Workhorse, and then Dylan, you got Boeing, which Josh also asked me for, and then I have Disney for you. So let's go ahead and take a look at Boeing, the famous Boeing. Um, Amazing move today, Boeing. That was just absolutely phenomenal. Really liking what the stock's doing. It's really looking strong still, but it is looking like it needs to cool off. And I expect the pullback to happen to around 177, 175 real soon. Reason why is because if we look at any time frame, so here we are looking at 1 minute candles. This is probably one of the only time frames that the stock is not overbought. But when it comes to a large cap stock like this, especially if you guys are trading options, you got to remember we're not really looking at these day trade as 1 minute movements. These are, so Boeing's price target initially was $160 when we entered it at $132. I wasn't looking at 1 minute candles. I wasn't even worried about 1 minute candles when I was trying to chart Boeing. Reason why is because I expected over a $30 move for this stock. So if you're looking at a $30 move, do you think a 1 minute candle can really make a life-changing um, you know, effect on your stock? Probably not. You want to look at the longer term candles because you're looking at a more macro move. So you want to look at 1 month candles. I'm sorry. Yeah, 1 month or 30-minute candles. You want to look at 1 hour candles. You want to look at 2 hour candles, and you want to look at the 1 day candles. Really important. So the 1 day candle on Boeing here is I would say that this is a very neutral candle because it had a long wick at the top and a long wick at the bottom and a small body. It could mean that the stock does need to pull back and kind of cool off at this point. And if it does pull back, it will try to fill that gap all the way down to $173. And I say that it's a gap because this is the gap that the stock had made as it moved up in the past few days. I'm sorry, in the past day. So that gap needs to kind of be filled for the stock to fully cool off, and that could be all the way back to 173. You should set an alert around 173 for the stock to bounce back up. This would be your perfect entry around 173 for the stock to cool off. As you can see, the gap still exists on these short-term candles. The stock will cool off, kind of bounce back up, giving you a perfect entry. And your resistance point is going to be the top of this bullish flag, which is going to be 188.50. So loving what this stock is doing still. I expect a stronger move from it, but it does definitely need to cool off before it makes that move up. So don't chase the stock at this very point. Disney. Oh yeah, so Disney got some good news today. They finally got that approval on that deal with the NBA. So stock could very much gap up tomorrow. It's actually looking like it's setting up for a gap up tomorrow. I could see that because the stock had made this bullish flag right over here. You can see that this is the pole and this is the flag. Last 30 minutes of the day, the stock managed to push above this resistance, which was its previous resistance that it had broken before. But it's a good sign that it had the strong green candle at the end of the day that pushed it above. So the stock could very much gap up at open, but remember, don't freak out if the stock gaps up and tries to pull back to 124 because now it's just retesting that initial breakout point for it to bounce up. So traders will come in, volume will pick up, they'll pick up the stock around 124 and the stock will push back up. I would say that a next price target for Disney is going to be safe right around $128.20. That should be the next price target that you should expect Disney to move to if it does have a green day tomorrow and if the market health sustains it. Tuan, you need a chip. So ship. Okay, I see you. This is a pretty decent bounce right over here. So I don't know if there's an actual catalyst that moved this stock in the past day, but I like what it's doing. It managed to push up above the 10-day moving average. It closed above it. It could not close above the 20-day moving average, though. You could see the stock tried with this little wick at the top, but it got pulled down to close below the 20-day moving average. So what do we expect from this stock for now? Well, we need to look at the more micro picture. Let's go ahead and zoom in a little bit. What happened in the stock? So first thing I want to point out is, and I always point out the same things, you guys will notice that you guys will start hearing the same thing over and over again. And the real reason why is because, if something works, why change it? And I've been through multiple strategies through my years of trading, And this is what's worked for me. Less is more. And when I'm looking at the RSI and the MACD, the volume, that's really all I need to look at for me to determine if a stock is healthy or not. The moving averages as well, of course. So some traders will go out there and they'll sit there and do Fibonacci charts and all sorts of, indicators, but less is more. Really, if you really think about it, indicators, they tell you the same thing. All of them do. It's just about your favorites. And some of them, like volume, will be the exclusion to that. But in reality, the MACD and the RSI are going to tell you pretty much the same thing. They even have positive and negative divergences. So I would say that less is more when it comes to charting. Just a little tangent, but you'll see right over here that the stock had made a positive divergence as the stock moved lower. Its RSI was actually moving higher. You can see the stock has been moving lower, and then the RSI was moving higher right over here. So that's a good sign, and this is probably why it bounced. And so from here, the stock is already looking like it's moving into overbought territory on the 30-minute candles. Let's see what it's doing on the candles. Same thing. It is moving into overbought territory. Not too overbought yet. So the stock could very much run to 0.14. Let's see if it did anything in the extended hours. Yeah, it did. So the stock did actually run to 0.1550 in the after hours. So what happens to the stock here? Considering the volume that it got, I would say, well, actually, it became overbought right over this. So it's kind of tough to say what this stock's going to do. It may gap up tomorrow. If it gaps up above 6.1650, then this stock will likely be a runner tomorrow because it will come back down, test that support, and push all the way up. And it will probably try to run up to its next resistance around 0.18. After that, it's going for a while. So there's a lot that can come from this stock. I would kind of just wait for development tomorrow off of this specific move. It's only a 1 day move, so don't get too excited. It could be just a dead cat bounce, happens all the time. So I wouldn't get too excited just off today's move. I would wait for tomorrow for further development, but we'll definitely keep an eye on the stock in the morning. So CPE, and that's for Hector. So let's see what the stock is doing. It looks like we've charted this stock before. Let's see what CPE is doing. Sorry, I'm plugging my laptop in. Here we go. Okay, so let's take a look at the 1 day move. So CPE, you could see right over here, the stock got pulled all the way down and bounced perfectly off the 10 and the 20-day moving averages. These are probably the best stocks you can enter because if you're able to catch a stock that bounced perfectly off the 10 and the 20-day moving average right when it bounces, and you can set a stop loss right below that point, then you're going for a lot of gains because think about it. From this very point where the stock bounced at 0.75 to where it closed at 0.82, that's a really significant um, move. So I like what the stock's doing. It made a bullish engulfing as well. So this candle, this is the 1 day candle, engulfed the previous day's candle. So that is a really good sign. I know oil saw a lot of action today. Not as much action as airlines, but with airlines moving, you got to remember what comes from airlines moving. Obviously, more energy is going to be used. So if you put two and two together, you can expect these sectors to kind of follow one another in the future. So I like what this stock's doing. It's creating a big pennant pattern as well. So there could be a big breakout coming from this one. Thanks for bringing this one to my attention. I like what it's doing. The next resistance that it has is really going to be right around the 110 mark. So it could very much run to 110. After it breaks 110, it could very much run to around 135. So I'm going to put a star by this stock. I'm going to keep an eye on it. Obviously don't rush into anything, but thanks for bringing that one to my attention. I'm going to go ahead and keep an eye on it. Art, you asked for TWO. Let's see. Is Two Harbors Investment Group. So I know investment companies were actually seeing a lot of action today too. So there's no after market movement on this one. So let's see what it's doing. So definitely seeing a nice rounding bottom. So the stock is trying to push back up. You could see that the stock is squeezing a move. So I like what the stock is doing as well. I'm going to put a star by it. Let's see what its potential is though. So we have to put some support lines and some resistance lines. So the support line is going to be right where it bounced on its last bounce, which was right around the 450 mark, right around here. And the stock's next resistance is going to be where it got rejected before, and that's going to be right at this point, right over here. You can see the stock tried to make it above that point, but got rejected. making its resistance at $6. So you have a trading range that's a little too wide between $4.50 and $6. So expect the stock to consolidate between those two price points. What I would personally do on this stock is that to that resistance as possible, unless it gives you a pullback to the support. That's even better. But if you want to play a breakout play on it, you can enter the stock right around the $6 price point. Expect it to break out. It's going to get rejected right around $7.60. The breakout on the stock will be pretty big if the volume is there, which looks like there's a lot of volume flowing into the stock as of recently. So I'm definitely keeping an eye on this. I like what it's doing. After that $7.50 price target, it has potential to move all the way to $10. So thanks for bringing that one to my attention. I'm going to keep an eye on the stock as well. Ramon, you asked me for Lowe's. All right, let's see what Lowe's is doing. So this is a fairly expensive stock. Let me see what it's doing on the one-day candles because I know it ran up for a while. All right, so not looking too good for this stock. It did come back down and it managed to stay above its support of 126.50, which was its highest point. Yeah, so this was its all-time high until it recently broke above it. But this one-day candle is a pretty strong bearish move, and the stock is definitely overbought. So this might be a good candidate to be a put play. But we'll have to wait to see what it does tomorrow. If the stock drops below that $126 support, then this is going to be a really good candidate for a put play. So I'm going to label this one as a put, and I'm going to wait for it to break under the $126 support, because if it does, that means it broke a really significant support. The support that came from an all-time high is just as important as it was as a resistance. So the stock had been struggling to break over this point as a resistance. It shouldn't come back down below it being such a strong point. So there are weak support lines and there are strong support lines, and this happens to be a very strong support line. So I'm definitely going to keep an eye on the stock, but I'm more bearish on it than I am bullish, I gotta admit. Julian, don't worry. I know you missed your two requests, but they were actually the first two, so you'll be able to catch them in the beginning of this video. So Slick Nick, you want UAL. So let's go ahead and take a look at what UAL is doing. A lot of airlines were doing good today. So amazing move. Look at that. That is just phenomenal. You could see the stock's breakout point right around the $32 mark. You could have put a resistance line right over here at $32, which actually, it looks like we charted this stock before, but I'm going to take those charting off. And we're going to look at its breakout and kind of analyze it, considering this is one of the last couple charts that we're going to do. The stock resistance point at $32. You can see that right over here. I'm going to draw it out for you guys. So we had a resistance point at $32, and the stock had broke below it, tried to test it for a breakout, broke below it, tried to test it for a breakout. But as airlines started picking up more tractions and investors started to realize that there's a lot of potential in these stocks, that of course, I mean, flying wasn't going to stop forever. That was a pretty obvious one. But a lot of you have been asking me, is it a good time to buy airlines? And I told you guys to only buy when you see light at the end of the tunnel. Well, ladies and gentlemen, we're starting to see light at the end of the tunnel. This is a perfect time for us to pick up some airline shares for our long-term investments. However, you need to do your own research. This is not investment advice. I'm just telling you that this is a perfect time for me personally. So I'm going to try to catch these airlines on pullbacks. Like, I want to catch UAL on its pullback to its breakout point of around $32 before I go into it. Because if I buy it at 39, I'm already down $7 from what could potentially be a long-term investment. So the very next price target I have for UAL is actually going to be $44, which is going to be a very easy price target for it to achieve. But expect it to pull back and consolidate around the 32 before it makes it to 44. Now, it may have enough steam to push the 44, but it will definitely get rejected at that point and come back down. So keep an eye on this one. I love what the stock is doing. I'm definitely keeping an eye on it. After 44, I expect the stock to go to 48. The reason why I expected it to go to 44 is because this is where it gapped down from. You can see that this was the resistance that it made that it couldn't go back above. So I love what the stock's doing. I'm adding it to my personal watch list as well. And then I know somebody requested a chart in the chat. So let me take a look at the chat. XSPA, Kiana. Okay, let's go ahead and take a look at XSPA. I know that was also a very popular one today. It probably had millions um, in volume. So let's take a look at what the 1-day candles are doing. So right away we see that this one has really stretched itself out. Now, this stock is moving on news, but you could see that the RSI is definitely overbought, which means that we would be chasing at this very point. Unless you're in it, I wouldn't go into it unless it gives us a pullback. Now, where is that pullback expected to go to? For that, we have to look at the more micro candles. So we look at the 3 month candles, and we could see that the stock had made resistance lines right around the $1.15 point. If I'm not mistaken, we actually graphed this chart out yesterday, or charted it out yesterday, and we said that this was a significant resistance line for it. Lo and behold, the stock broke above it today massively. I mean, the stock almost doubled. It did double at one point, and the stock had pulled back. But check this out: it managed to stay above the $1.60 price point. Why is that price point significant? I'm sorry, it managed to close above that price point. And that price point is significant is because that was the gap up price point that the stock made. But check what the stock did in the last in one of the, I believe this is the 5th hour of the day. The stock had gotten pulled all the way down to bounce off the 10-day moving average. And this is why it's important to switch back and forth on the candlestick charts. It's because you could see bounces like this. And if you're looking at the 1 minute candles and you switch to the 1 hour candles while the stock is bouncing back, you can see that the stock bounced perfectly off that 10-day moving average to get pushed back up to close right around this range. So I wouldn't chase the stock at this point. But I will tell you that you have resistance lines and support lines. You have a support at 160, and let me see if the stock did anything in the after hours here. And you have a resistance line at $2.20, which was the highest point that the stock had gone to um, through the day today before getting rejected. So with that being said, let me see if there's any other chart requests or any questions. What about Air Canada? It's been going up for the past few weeks. So let me see if I can find Air Canada without the stock ticker symbol. Air Canada, AC. That's a pretty good stock ticker symbol. So I'm liking what the stock's doing too. It has been going up. It is a little bit overbought. Let's see what it's doing on the 1-day candles. It's not overbought yet. Actually, this is a lagger. I'm liking the fact that this is a lagger because we could see that all American airline stocks are doing really well, but Air Canada seems to be slower than them, which means that we can capitalize on this. So add this to your watch list, because if the stock does indeed break over that $22.50 mark, then expect the stock to jump all the way to $27. So I love what this stock is doing. You always bring some great stocks into my attention. I love it. Let me give you guys some support and some resistance lines for you to kind of take home from this video. The stock has a support at $18, which was its previous breakout point. So the stock will fluctuate between 18, and it will fluctuate between 18 and $20, which is where it got rejected today. And then its very next resistance is going to be right around $23. So the stock will likely fluctuate here, break out, fluctuate again between this price point, break out, and go all the way to 26, and even to fill the gap at $28. So